Hi, and welcome to Investment Banking University, where we teach you how to become an investment banker. Today, we're talking about valuation methodologies. And valuation is really at the core of finance and thus investment banking. So we're talking about the four major methodologies that investment bankers and private equity professionals use in valuing companies, meaning determining the price and the value of the shares of the company as well as the aggregate value of the company. So the first one that we're actually going to be looking at, the first valuation methodology, is called public company valuation. And that's where total enterprise value, or TEV, is equal to the market value of equity plus debt plus preferred shares plus minority interest minus cash. So the market value of equity, we're actually going to be deriving from the balance sheet. The debt's from the balance sheet. The preferred is from the balance sheet. The minority interest is from the balance sheet. And the cash is from the balance sheet. In terms of the total enterprise value, we're taking a look at the share price times fully diluted shares outstanding, and that includes options and warrants. As we're going down to the next valuation methodology, which is known as comp companies or trading comps, we're actually going to be looking at multiples associated with times revenue and times EBITDA. Moving down to precedent transactions, we're talking about M&A transactions that have happened in the past in order to determine an implied valuation for a target company. We're going to be looking at control premiums, and those control premiums are typically in the 20% to 25%. And then finally, the academic theory associated with finance is typically around discounted cash flow, DCF, or intrinsic value. And what we're going to be doing there is we're going to be spreading our financial statements and projecting our pro forma in order to then derive our free cash flow, or FCF. From there, we're going to be determining our weighted average cost of capital, as well as the next step, determine our terminal value. And then from there, we're going to calculate our net present value and implied valuation for the company. So the DCF is actually an intrinsic value, and the precedent transactions and comp companies are market-based values. So that's the four valuation methodologies for investment banking and private equity professionals that they use, and that which is taught at Investment Banking University. And we apply this at AltQuest Group at altquest.com. So go to investmentbankingu.com, download the book, and learn how to become an investment banker. Thanks.